The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more, do we go into the breach, dear friends? So what do we have going on today so far? Well, right out of the gate, the GERBS numbers, as I like to call them, J-E-R-B-S. They took my GERB, if you're a South Park fan. Anyway, jobs numbers out there were it spooked the market. I'll just say that. Kind of spooked the market at the beginning. The S&P's really never recovered. The NASDAQ has repeatedly tried to run to the positive and been rebuffed a number of times. Kind of like me asking girls to the prom at high school. Few rebuffs. But we're off 6 points on the S&P cash. Volume today is very interesting, 1.6 billion shares as we start the show. So not a big volume day. Of course, Fridays don't tend to be. We also had a nice little bounce in the VIX. One of the first questions already today in the den is, do I subscribe to Steve Rhodes' 10% move in the VIX? You kind of have to give up and say that that's probably it for a little bit. And below 10 on the VIX, I think I'd want to see two different stories. And the problem is that historically the VIX is somewhere between 20 and 25. That if you wanted to live, whatever we've got the last 10 years thinking that it's going to be below 20 on an ongoing basis, I think someone would have told you in 2010 that you were insane. That just is incredibly too low and basically brings on huge risk taking that shouldn't be probably out there. And so I'm going to say that it seems to work fairly good at higher levels. I'd want to see a study at lower levels like 10. A lot of times when you get signals in the market, they're not the exact same at the highs and the lows in markets, and they offer a little difference. I would just say that the chances of remaining below 10 on the VIX is something that seems historically a bad bet. That doesn't mean that we go to 20 on the VIX tomorrow or on Monday or Tuesday. But it does mean I suspect that we are going to have a lot of problem. I showed 1027 as the high in the VIX today, and we're at a little over 10 right now. So I would just say that if this wasn't probably some kind of 9 print on the VIX, that we would probably have to think that way. Under 10, literally anything can push this thing back up to 18. It wouldn't take much of anything. And so I will continue to think that, does this mean that we actually have to go and really move on Monday? Not necessarily, but I'm not expecting this to, at least on the VIX, to remain under 10 for very long. Very much like Jaws, where they had 3 barrels in the shark. I just couldn't believe they held it down that long. Eventually, that shark's going to pop back up to the surface. But I think this 10 level is about as low as they can keep this thing for more than a day or two without once again popping higher. So, 992, something like that. Okay, so what else do we have happening out here? Well, do I get it? No, I haven't done it. We like to always come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
we've had some huge moves and some other things out here. We'll get into them today. Market kind of seems a little frozen, down about the 6 points off on the S&P cash. And again, everybody wants to buy the NASDAQ when it's down a point. And it just seems a little euphoric to me. If the market came back on light volume for a couple of days, to me, that would be much more inducive to a higher market than people dying to get in just 2 points under. I said something that had been around the stock market from maybe the early 1910s or so. That's the first time I saw it in any of the historical stuff. But it basically goes like this, the old saying, if you're not buying the highs, you're just not trying. And the idea was, of course, that when you wanted to get into a bull market, just keep running it up. Just buy more, buy more, buy more. Because the idea is not to sell on the way up, but on the way down. If you read Jesse Livermore's book, he says it's very difficult to be a big stock manipulator and sell on the way up. The idea is to get it as high as you can, so when it comes off, it looks like a deal to the saps. And I don't know if that's changed or not. But we'll see. Anyway, the NASDAQ's had problems going positive today. But again, I think that's probably going to be a lot more about digesting the jobs data and what happens over the weekend. As always, we like to start off the show with a little bit of history.
And it's all just a little bit of history repeating.
On this day in 1866, a Reno gang, or the Reno gang, I guess it's the Reno gang, carries out the first robbery of a moving train in the U.S., making off with over $10,000 from the Ohio and Mississippi train in Jackson County, Indiana. Prior to this, innovation in crime, holdups had to take place on trains sitting at stations and freight yards. Many were killed attempting the deed. Railroad owners eventually got wise and fought back, protecting their trains' valuables with large safes, armed guards, and even specially fortified boxcars, as you may have seen in some Hollywood movies. So probably wonder how many people remember that movie. I think it's still good. You know which one I'm talking about. Okay, what else is happening out here? Well, that's about it for news. We got a lot more news to talk about in technology. We'll be doing that in the 3:30 hour with, or the bottom of the 3 o'clock hour, probably more properly, with Tom O'Brien. And got a lot of interesting things to talk about today, so we'll wait till that to do a lot of technology talk, although you can always call me individually right now at 877-927-6648. You can email me at path@tfnn.com. And, of course, what else? You can post a message in the den like many others. Heroes, and I don't use that word lightly, heroes have done. Okay, so what do we have? I want to look at TLT, so we'll do that when we come back from the break. That's really what had kind of interesting motion. I've been looking for 122 on it, so we'll see what this has to say about where the TLT is going today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And, we were talking about the TLT. I was just thinking, somebody's asking me what I thought of the movie. I haven't seen it yet. Oh, we're talking about Blade Runner 2049. But not now, but later, before you go see it. There are 3 shorts, like 5-minute shorts, that they asked, the director of the new movie asked. And you should probably look those up before you go see the movie. They're all give you a little taste of what happens in between the original movie and what's the follow-up movie tonight. I haven't been really excited about a movie. Dunkirk, I wanted to see that. But most of these movies, just version 15 of Fast and Furious, just there's no reason. There's a reason why I think that no one went to the movies this summer. That was there weren't any good movies. But spent a lot of time out there. Just have to tell you that what we see in the news in the last day or so is not uncommon. The guys that run there are egomaniacs and narcissists and miserable hypocrites for the most part. I'm glad I didn't have to deal with those money guys. I dealt with the guys in the trench actually making things happen. And I rarely saw a director or anybody else. And even then, they told you to bow your eyes and not look at them directly. I'm not kidding you. I didn't do it because I didn't care. But, what else could you say? Anyway, we were talking about the TLT, not Blade Runner 2049, a great movie, I think, coming out tonight. We got about 7 million shares. This thing went down to 2303. They kind of started pushing this thing back up, saying it didn't mean what everybody thought it meant. A lot of spin today. My guess is that this is headed back to 122. You may get the bounce out of here today, but my guess is that you've got enough juice. And this little gap up back on the 17th of May with 11.2 million shares is a magnet just wanting to see that retested. And that's going to get you into the 122 area. At that level, you're going to find out a lot more about what's going on. I've always thought that this thing was in a bigger trading range. We caught it once on the big move down before off this doji, I think, wasn't it? I can't remember now. I think it was this doji of June 26th that we played. But it continues to be a problem in that there's just a lot of moving pieces going on. But certainly if you just looked at the chart, I think that 122 level does look like that's where it's headed. Other things going on today. Let's take a look. A lot of discussion about Facebook. I had a discussion with somebody in the den about it. And there's a guy that's on CNBC that's held up as a tech titan. I think he's kind of a blowhard. But a lot of discussion about internally about what's going on in Facebook. My thoughts on it, other than it's up a little today on not much volume, kind of back up against the supply line. They will be going in front of Congress, what is it, November 1st or something? So you got that kind of hanging over their heads. But the discussion, I guess, on CNBC with this widget was all about what they need to do in the future. And I'm going to tell you that everything that they've faced already, Yelp has already faced already. And that is, who do you know is on the other side of that conversation? Who's putting it together? Is it a bot? Is there and Yelp, I don't know if they've totally addressed it, but it's not a new problem. If they haven't been thinking about it, it's their problem. But I have two things, since this was a problem even 10 years ago, especially in programming websites where you go and ask questions and other people debate the wisdom of whether or not you should actually have semicolons at the end of each line for C# and whether it's smart or dumb. A lot of inane conversations, but most of the ones that are on these websites that most programmers go to is trying to figure out why something doesn't work, or a bug, or the correct way of doing something, and everybody kind of chimes in. Well, what you do is each time you answer a message and it gets kind of a thumbs up, you get a little bit more ability to answer other questions. And so you develop a reputation across time, not that you can gain a reputation in one day. Because, of course, people wrote bots to run the reputation up in one day and then could go in there and spam out all of the different places. And I think that's it. And even then, of course, you would have people leaving these accounts somewhat dormant for a time. But there has to be some kind of significant content and thought given to raising somebody's reputation in those particular forums. And that's what's missing out here in Facebook. Literally anybody that says anything can get some traction. And that's what happened with Yelp. You could be literally anybody and destroy somebody's business by giving them a horrible review. And the idea that you should have at least some level of reputation, and that probably says whether or not you're on the level or not. This stuff has actually been done for 10, 15 years. I don't know why Facebook wouldn't use it, other than the fact that they're more than happy to sell ads to all sides and keep the fray going, which is probably not a bad business decision on them on the short term. But now that they got their hands caught in the cookie jar, they're basically talking about how using censorship would be the right way to go. Well, they tried that last summer, got their hands caught in the cookie jar again too. Problem was they hired all the censors from somebody that worked in a campaign that was trying to elect a president. Well, I don't think you're going to get very many people that have a decent sense of propriety and goodwill if they're working in a presidential candidate's election event. And that's what happened last summer to them in June and July. And they had to do a mea culpa. So they said, well, we're just going to do it algorithmically. Well, still a problem in the fact that the programmers that wrote it biased. So my thought is that eventually they will move to some kind of reputation-based system. And by doing that, you'll find out whether somebody is well thought of or partisan and or probably a Russian sitting in his basement. Do they have basements over there? It's like Florida. We don't have basements. Anyway, tough to know, but much bigger answers for Facebook. I don't think they want to turn the ads away, at least for a little while here. But it's been done before. Nothing that these guys are facing is new. So just thought I'd chime in with that. We'll be back after this.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And a quick email from John in Sarasota asking what I thought about energy and specifically the OIH. And, you know, to me, everybody I know wants to be bullish crude out here. I just don't see it. anytime this thing goes higher, they can turn the spigots on real big up there in the Northwest. I didn't like, in fact, while we were long UNG for about a day, and crude went lower and nat gas didn't go higher, so I was out of that trade almost instantly. That continues to trade kind of lower out here today, doesn't it? Let me go ahead and check that first thing down. Nat gas, yeah, off another 6 cents. So, you know, I lost a quick 20 some odd cents on UNG quickly, but I got out of it just because it didn't act correctly on the way that the energy stocks traded earlier. And I actually did kind of take an oblique way of shorting energy yesterday, not the OIH. But it was one of those things where it looked to me like I didn't like this 4 days of this thing going sideways out here, especially after the move higher on the 25th, that you really never had any follow through. You could almost say that that move after the 25th, you got nothing but sideways all the way for about 7 or 8 days. And I didn't see anything that was going to drive this sector up higher. The question is, where would this come back to? And I think you're probably looking in this range of the candles of, what is day is that? The 12th of September could be the next support area, which should take you to about $23.75. What was the high of the day? 24.01 is the high of the day, and the close was 23.86. So kind of in that price range. That's the kind of candle I think you could get back to, because that was kind of the start of the move up here. But, you know, you had one day that kind of gapped up, but that was kind of the exhaustion day. I suspect that's on the 25th of September, and that it just went sideways for a while, didn't do much to me. As I said, I'm kind of obliquely short oil and commodities, but it is what it is. Not much going on. Another question about gold. I just don't know how you make anything out of it. It's gone sideways for a couple of days. Probably be more interesting on Monday than I think today, and you can see what is going on. But I just don't see a whole lot in either of those. Okay, so we've got that taken care of. Go back to my email. I think I've got something else out here. Okay, the Technology Insider is out. You can always go check a 30-day test drive of that on the front page of TFNN. Just checking my mail here. And we'll look at a few other things, see how they've done over the last few days. Wanted to see a few of these other ones. We talked about WIN yesterday. I wanted to see how some of these other ones that were up here on light volume had traded. You broke the 106.50 on WYN on August 3rd with 4 million shares. Yesterday you had 650,000 shares. Today you got maybe 1 million, but you got a little kind of a hanging man on this one. I kind of like this thing as a top in the fact that you had the August 3rd high to the August 18th low. When you compare that to the September 7th low, tie out here today, energy was off about 20% on the way back up. Let's see if there was anything else. Barracuda Networks. Let's go on a little longer time frame on this one. Getting kind of close to this January 10th high of this year, 25.66, that had 4 million shares. So yesterday you had 562,000 shares. Today just 720,000 shares, 27,000 shares. So could you still get up to 26.69, which is the October 12th high? I think you could. And the energy off this huge crater down here to 1906 is kind of good. But my thought is that this one is probably in some kind of trading range, and you're going to want one more shot at this thing down around 22 bucks. So we'll keep an eye on that. RJF Nabisco, or no, Raymond James, excuse me. Some of these financial stocks putting in some signals. RJF high on July 26, $85.90. 97 cents, 900,000 shares. Yesterday, you had 574,000 shares. Today, got about 300,000 shares and a big looking doji out here. So watch these broker dealers come on Monday. In fact, I guess let's take a quick look at Goldman Sachs and see if there's anything else out on here. This one, you know, you had kind of a big day yesterday, no more follow through today. Of course, it's kind of a down day, but this is where you're really coming into the down days of March 17th, 18th, 19th, and the 21st. Earlier this year, when these things came down on 5.6 million shares. And as I said yesterday, what do we have? 3.5 million shares. And today, just 1.6 million shares as we make a higher high as you come in to a fairly decent supply line in some of these. So would I pull the trigger short on them? Probably not. I think there's lower hanging fruit, but still interesting. AT&T. This one, just is one that works fairly decent off these signals. Now, the energy was fairly decent up off this September 8th low, but basically what you see is this thing in a bigger trading range like a lot of the stocks. And the July 28th high, $39.67, with 36 million shares, got tested with 28 million shares, went above it, closed below it, did its test. I don't know if I would have been short it. Certainly would have sold it if I was long, because that was a fairly decent signal on a big stock like that. If it's a high flyer, maybe not so much, but if it's kind of a stodgy stock, that tends to be fairly decent. VF Corporation, VFC, getting very close to its previous high or above it. Oh, it actually went above it today. So that's what we're looking at. The March 18th high, $65.33, 4 million shares. So what do we have here today? 1.1 million shares. Yesterday, 1.8 million shares. 1.8 million shares the day before that. So you're getting back over here pretty much in the supply line from that March 18th high. Ideally, if you were going to pull the trigger on this, you want that 68.03 high from November 5th, 2015. And I don't know about this company, but that would be probably the place to pull the trigger on it. ITW, what's this? Illinois Tool Works. I wanted to see how this one was doing. It tested yesterday on lighter volume the June 20th high, 150.29 with 2.15 million shares. Came in with 1.3 million shares yesterday, and today just let's call it 400,000 shares so far. So now this one, again, probably lower hanging fruit out here. We're looking for some high flyers to flip, and we'll talk about that when we come back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And we'll take a look at some other things out here. Give me a call at 877-927-6648. What else do we have I wanted to look at? Oh, question in here about UNG. Normally, when crude goes down, natural gas goes up. And we had a day when crude went down and natural gas went down. That's what I disliked about the pop. And so I got out of it at the open that day, and it hadn't gotten any better. And you might have gotten a little bit more of it if you held on for a day, but I didn't like that gap down in any of the other moves. This was down on the second. Normally, if you see crude down, you should see nat gas up, at least for a little while. And if nat gas is down, you should see crude up. There's almost a one-to-one correlation in the very short term, because the people that want to hedge their crude almost always go short natural gas. So you'll see a little bit of movement in natural gas opposite to crude almost all the time. So at least for a little while, especially in the mornings. If you don't see that, it's been my experience that there's something else going on that I was unaware of. And that's why I went to a tangential short on energy and crude. What else do we have to go? Questions. Let me look at a few of these. Does Skyworks Solutions move today change anything? And I don't think it does. I looked at it earlier, so let's take a look at it again. I think this is just winding up to go back down to 94.35, which is the June 29th low. Apple's just kind of up at the end of the week to 155. My guess is that you see Apple close about 155 exactly. Now that Apple got a huge business in weekly options, this thing also tends to expire right at a expiration number, in this case 155. And you can kind of see that every week. They'll try to pin this thing now right down to almost the penny, down to an even number like 155 or 152.50, a strike price number. And by the end of the day, maybe it's 10 cents or 15 cents higher or lower, but not where it's actually worth anything to the holder of that option. So to me, you're off. You were up, what, 155.49? To me, this is just kind of them pushing it around a little bit. Mondays, you tend to see a lot more action, in Tuesdays and Wednesdays in Apple that has nothing to do with them trying to manipulate the price of all those options that expire almost instantly in this market. So you might want to Okay. Anyway, nothing happening out here. Just a light volume, less than 700,000 share bounce today in Skyworks Solution. So we'll look at its brother, which is Avago, AVGO. And I didn't think there was anything else in that one either. Another no volume day, 1.1 million shares. He had 2.3 million shares yesterday. So you're going to kind of move around in here. You probably can. But from what I think, Apple right now, unless some news comes along, is probably in a 150 to 155 trading range for a little while. I don't think I have it on my list of stuff to talk with or about on Apple today, but I started seeing some articles come through talking about them having potentially battery problems, and we'll see whether or not, you never know whether that is going to grow to be something and go viral. With Apple, it tends to be that way for a while. So we'll see. If Monday you start seeing more about the battery issues with those iPhone 8s, I think you might see that 150 a little sooner, but I think it's just going to slowly kind of bounce around that 150 to 155 level until they get the 10 out and they get it out with some kind of volume, which seems to be slipping every single day. So let's take a look at some other things out here. Looked at Facebook. Let's look at Netflix NFLX. Of course, we looked at that yesterday. A little bit more today. And the volume's not all that bad. Gave back about half of this pop to 198.92. And can you make a lot about that? I don't think I can. Other than the fact, maybe if we get to it, there's an article about Jeffrey Katzenberg raising about $2 billion to start a competitor to Netflix. And maybe we'll have time to talk about that today with Tom O'Brien. But the thing that always bothered me about Netflix is that maybe they can make some content that no one else has. But my thought was, when everybody else gets into this business, what happens? So they, of course, were just renting DVDs for a while. Then they got into streaming. Now they're into content. They've certainly backdoored this thing about as well as you can do. But is anybody that's ever been in Hollywood for any length of time, especially probably one guy that ran a big studio as of yesterday, but no longer does, is how fast the fortune in Hollywood and the people there turn against you. And that would be it, that maybe this new Stranger Things coming out the end of the month, maybe it's not as good as they've seen before. Maybe a few of these other things. I got rid of Netflix in January. Maybe I'll get it back for December, catch up on all the stuff I missed. But I don't know if it's something I got to have all the time. I do like Amazon Prime. They have a lot more documentaries. And maybe it's just the stuff that I like. And most of the time, if I want to watch something like BoJack Horseman, I go over to my friend's house who has it. I am tight. Does anybody ever ask you? I don't like to spend a dime. What do we have? Anyway, that's kind of it. What you probably wouldn't like to see this thing is it come back again on Monday and open up lower. That would be probably a fairly decent reversal pattern up here at these highs. In the past, raising the price has always meant a lack of subscription growth. And you just never know. I know that Stranger Things is coming out, which is kind of a big draw. A lot of the other stuff just doesn't. I'm very tired of all the Marvel and comic book stuff. I'm worn out with it. And it just seems like so much of what they're doing is all that comic book stuff. And yeah, I'm looking for something else. So what can you say? Just don't watch this thing pop back down. When we come back, we're going to start looking at Microsoft. I actually spent about half of the day listening to keynote addresses from Microsoft and their big shindig this week about machine learning. It's down a little today on light volume. We'll talk about this one and what their plans are for the cloud as we take a look at this. And of course, unless something's happened. We're off 5 points on the S&P cash. No big deal. We'll be back in a minute.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Hi, folks, this is Tom O'Brien. Come join me next hour as we bisect and dissect these markets, right here on TFNN. Wow!
And as we try to wrap up at this day's broadcast, what do we got? Off about 5 points in the S&P cash. No big deal so far. Kind of light volume on a Friday. Just kind of different. Then we're down a little bit for one day. That's not supposed to happen in the stock market. We only grow to the sky. We all know that. But what do we really want to look at is pretty much what happens on Mondays. Fridays have been kind of seesaw days recently. And, of course, you get those big moves, it seems like, on Mondays and Tuesdays. And by the end of the week, we just kind of flatten out a bit. As I was going to say, there's just not a lot going on out here. We're going to see if there's anything else. We'll see. Got a question. Look at something. I just can't remember what it was. Oh, question was HLF, which I was looking at and the possibility of shorting. And glad I didn't. This thing went sideways for a number of days, but actually more of a buying pattern. I don't know what the news is on this one today is, but it's one of the few stocks truly moving. It just went right back up to the 74.49. Again, especially at the very end of bull markets, not uncommon to see everybody that's short squeezed out of these. I'll take some time after the show and look at it. But not uncommon for it. Not a lot of volume, but kind of a big candle out here for Herbalife. I continue to think that this stock, once everybody quits playing games with it, is probably headed down to about half the price. But I don't see anything that says that just yet. That's on a fundamental basis. On a technical basis, well, you went back up to the previous high with a huge candle. But, man, probably, I guess that's about as good as you're going to get with volume on a light day like Friday. Watch this one on Monday. See if this isn't just taking everybody to cleaners today. We'll have to find out. See you at 3:30 with Tom O'Brien. In the meantime, so when you can, not when you have to, we'll see you Monday. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.